we're adding $1 trillion in debt every 100 days. And we have, I don't know, 150 trillion in unfunded liabilities. The national debt is up 11.5 trillion since 2020. And this is a country that has its fiscal house not in order. And when you look at the unfunded liabilities, who's going to pay for them? And, when the Congressional Budget Office says in 6 years, 100% of tax revenue goes just to pay mandatory entitlement and interest on the debt only, when you realize military spending is discretional, who's gonna fund our military? So we have a situation that is it's not. We can't continue down this path, put it to you that way. And so I would just simply say that ultimately, gold and silver go higher in the face of a dollar that falls. And I don't know if it's gold and silver going higher as much as what JP Morgan is saying is that the dollar has to fall. And that's really what I think ultimately will happen.
Did you know that the US is adding $1 trillion in debt every 100 days, with a staggering $150 trillion in unfunded liabilities? Since 2020, our national debt has ballooned by $11.5 trillion. In just 6 years, 100% of our tax revenue will be consumed by mandatory entitlements and interest on the debt, leaving nothing for critical expenses like military funding. Andy Schectman paints a grim picture: a collapsing dollar, soaring gold and silver prices, and countries around the world ditching US treasuries. This isn't just speculation. The Congressional Budget Office warns that our fiscal house is far from in order. With inflation hitting everyday Americans hard, imagine paying $74 for a cheeseburger and fries in Las Vegas. The true impact is undeniable. Schectman highlights the shift away from the dollar, with gold now replacing the euro as the second largest asset held by central banks. As the US faces the prospect of printing more money to meet its obligations, the risk of inflation and outright confiscation of assets grows. This financial crisis could shake our economy to its core.
Now, when you look at what's happening around the globe, the de-dollarization, the de-treasurization, a growing union of countries, as we've talked about forever.
De-treasurization? Is that a new one?
De-treasurization, yes. Well, I mean, that's what they're doing. Why would anyone want to hold treasuries? You look at gold, it's up 9.9% on average for 25 years. That's doubled the pace of the 10-year treasury. And we've proven to the world that we don't like what you're doing. We'll take your treasuries and might even give them to the country or buy weapons with the proceeds and give to the country you're in a war with. That's a very tough thing to come back from. So I think ultimately it leads to more of the same. Countries seeking alternatives to the dollar, seeking alternatives to the treasury. Read Zoltan Pozsar. This is Bretton Woods III, all about commodities. And it's also a country that has obligations that will be very difficult to meet just from tax revenue. So where are your options? Raise taxes, print money, and selling treasuries in an environment where there's only $8 trillion in treasury holdings that are foreign held. The majority of it is owed to us. Foreigners are not really keen. Now, there are some countries, if we are to believe that UK and Ireland and Cayman Islands are keen on holding our treasury debt, but the ones that have been responsible for funding our spending binge seem to be moving in another direction. So yeah, ultimately, I think those numbers might even prove to be low. Ultimately, gold and silver go higher in the face of obligations by this country that can really probably only be met through printing of money or monetization of bonds. Same thing, because just no one wants to hold our treasuries because of inflation risk, default risk, and outright confiscation risk. And I think that's really where it is in its simplest of terms. So yeah, I don't think we've seen anything yet, I guess, is the bottom line. And I'm happy with those numbers, but I would think that they could actually be much higher. You take 3,000 and divide it by 42, which has been, the average price ratio of the last 100 plus years, you get $71.50. Divide it by 7 and you're almost to 400. That would be what it's coming out of the ground at. So yeah, I think it's just fair to say that gold and silver are two of the only assets that haven't been allowed to find fair value when everything else has been distorted to the upside. Price discovery hasn't really happened in gold and silver for the numerous reasons we've enumerated before. But I think, yeah, ultimately, those are numbers that I think are certainly realistic and maybe a whole hell of a lot higher. I guess I'll say this. There are very few absolutes that you can talk about in finance. And I've learned in 34 years, maybe the only absolute I can give you is that bull markets go higher than anyone thinks possible. Look at the Dow. When I started, it was 2,100. and bear markets will fall further than anyone ever thinks possible. And I would look at the Nikkei, which was 40,000 in 1990, or pretty damn close to it. And it's just now getting back to where it was. I know it bettered it for a moment recently, but it's taken 34 years to do that. And it's still just barely there, if not just below it, at a period of time where interest rates in Japan have been zero bound forever. So even with 0% interest, you can't entice the public who was burned so badly to go back in to the Nikkei. And so I think when we look at gold and silver in the scheme of things, this is I think a massive shift, a once in a generation shift away from the dollar. And so, yeah, sky's the limit, I guess, but it won't be easy and it won't be smooth and it won't be just straight up because of the obvious ramifications of all of this. So you got the West hanging on, doing all they can to shake people from the bull. Bull wants to take as few people along for the ride as possible. But when you realize that, gold right now has replaced the euro in terms of the second largest asset held by central banks right now for the first time ever, 18% allocation to central bank holdings, if we believe those numbers, the writing is on the wall. Gold and silver are replacing many traditional assets along with other commodities too. As Zoltan Pozsar says, this is about real commodities, no longer promises from countries that are bankrupt morally, socially, and actually. And I think that portrays for much higher prices in gold and silver, even than Bank of America or JP Morgan optimistically are telling us. If we realize that, I think on the London Metals Exchange, if I'm not mistaken, that the silver trade only represents about 3% of the gold trade, I would say much, 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 much more in gold than in silver. I don't care what the CPI says. I can't think of hardly anything that's only up 3% like they're telling us. I was just in Las Vegas, and although we stayed at the Wynn, which is great, that Sphere is incredible, by the way. A cheeseburger, French fries, and a Coke delivered to my room was $74. Dead serious on that. I mean, I wish things were only up 3%, but I think that the likelihood of inflation getting down to those levels is next to nil. I mean, the 3% inflation they're telling us is fugazi. The money creation is off the charts. The metrics by which they gauge inflation are distorted. And, remember, they told us originally there was no inflation, and then it was transitory. And, well, they told us there'd be 4 rate hikes or decreases, rather, for sure, the beginning of the year, and now maybe 1. And if they do that 1 towards the end of the year, it just reeks of it being politicized to keep the Democrats in office, to get that run up of the market prior to the election. But yeah, I think those days are long over. Like I was saying earlier, how do you pay these unfunded liabilities? Where does the money come from? You're creating $1 trillion in debt every single month. How is inflation only at 3%? Where is it holed up? Is it all in the equity markets? Is it in the treasury market? Where is it? And when it finally starts to rear its head in the real economy, it's impossible to say that inflation will get down to 2%. I can't believe it. I don't think if you go back and look at their numbers over the last 30 years, they've been at 2% more than once or twice. Most of the time, they're over 2%, even by their own flawed metrics. But yeah, I would agree. Zoltan Pozsar is a genius. And yeah, I don't think that we get inflation anywhere near 2%. And if they were really honest with their inflation numbers, it would be a whole hell of a lot higher. So if they do pivot and lower rates, it only reignites that inflation engine that is already higher than 3% for what they're trying to get us to believe.